Hi, everyone. Welcome to the Canadian Passive Investing Show. I'm your host, 𝗖𝗽𝗶 𝗖𝗽, and I'm joined by my co-host, August Biniaz. We have another incredible show for you today. Please like and subscribe as it helps us build our channel and allows us to keep bringing you great content and expert guest speakers. Our mission is to empower investors to earn passive income through real estate investing. Today, we're really excited because we're joined by Bronson Hill. Bronson Hill is the founder and CEO of Bronson Equity and has raised over $20 million for real estate investments. He is a general partner in over $150 million worth of real estate around the world. Oh,
Around
sorry,
the US.
around the US. Sorry, that sounded like a big number. Around the US.
Yeah.
Bronson is an authority on apartment investing and is continually putting out new content to help educate investors and help them achieve financial freedom. He spent his earlier years as a sales consultant for several large and startup medical device companies. We believe this interview with Bronson will bring great value to passive investors to learn about the mindset to becoming a successful investor, and for active investors in learning strategies in raising capital for their real estate deals. Welcome, Bronson. Thanks for being here today.
Hey, I'm really excited to be here. Thanks for having me. Just really love talking about investing, particularly passive investing. It's something we should all aspire to, whether you're active or you are more passive. Just to be receiving checks and income without having to work for it is amazing. So super excited.
Awesome. And before you get into the first question, I just got to kind of on camera, even before the show, I want to say, but I'll reserve it for the show, is say that we've been connected for a while on LinkedIn, and I've seen you around in this space for a long time, but I never got a chance to research you. And when I did research you before the show, I was really excited and for you to come on the show, and you have a wealth of knowledge and experience. So I'm really looking forward to this show. I just had to say that out there.
Yeah, August, I left the room for 2 seconds. He said, 𝗖𝗽𝗶, you got to come back here. Bronson is dropping gold. So that's
Thanks. Well, I'm really honored. I love being able to, I've learned some things. I love sharing it, and that's how we learn from each other, right? So really excited to be with you guys today.
Absolutely. Well, why don't we start off, Bronson, if you could tell us about your background and your start in real estate, please.
Yeah, so as you mentioned, I started in medical sales or medical consulting. So I used to go into surgery with surgeons that, and I basically assist with these heart procedures. So it was very interesting. I got paid well to do that. And yet I kind of realized I was not financially free. I had some single family stuff that I'd done, and I wanted to basically become financially free through real estate. So I thought, like most people do, that I'm going to do this through buying individual houses and managing them myself, or having a property manager. So I started buying houses. I actually had become kind of an accidental landlord, and I had this property for years in another state. And then I, with a family member, had started partnering to buy some property in another state, and we got to, I think, 4 or 5 houses, and I realized it was a lot of work. And so I had kind of a chance meeting with a relative who said, he was a multifamily guy that did a lot of apartment investing. And he's like, why don't you do, your whole plan to get 30 houses sounds like a lot of work. It doesn't really sound very passive. And so he said, why don't you do multifamily? And I said, well, I'd love to, but I don't have the money. And he said, well, you can raise the money. So that's where I learned about syndication. And I know you guys talk about syndication where, you have managing partners that help find deals and operate them. And then they work to really help passive investors to get great deal. So that's really what we do now is we help educate people, and we're doing deals. We have, like you mentioned, 150 million in multifamily assets, mostly in the southeast US there.
Awesome. Great. Yeah. So I guess that brings us to our next question here. So you're a high earner. You believe in real estate. You're investing in real estate, but you want to enjoy from the economy of scales that exist within the larger kind of multifamily assets, and through also an associate who tells you about it. Now you realize this concept of syndication exists, or as we like to call it, real estate private equity. Now, when you're coming into this space, when you're coming into this ecosystem, talk to us about your start. Do you start passively investing? Are you getting mentors? How are you getting involved? And talk to us about that journey.
So yeah, that's the power, really, of mentors, right? You meet people that are a couple steps ahead, or like in my case, my cousin who told me, he's been doing this for 25 years, high net worth, just super knowledgeable. And he said, read this book, go to this conference, check out this podcast. I did everything he said. And some of these books and things started talking about starting a meetup. So I ended up starting a local meetup in the Los Angeles area. And I'd partnered with someone who I'd been going to their meetup, but theirs was more of a general real estate meetup, and I was really interested in multifamily. So I basically went to them and said, hey, what if we start another meetup and I'll do all the work? You just show up, we'll partner on it. And sure enough, it worked great. We had 60 people at the first meeting. This was a little over 4 years ago. And my first investor actually came from that meeting. So I was there, and a guy comes up and it was like, I'd invested in one of your deals. And I was just so surprised because I was like, oh, wow, I don't have any deals. But I said, oh, let's get coffee. And so I showed him a sample deal. This is what a deal would look like. And he's like, yeah, I'd be interested in investing like 100,000 or something like that. So then somebody else I met at that same meeting was an operator who had a deal. And so I basically just connected the two. And so then I basically was able to get my first experience of being a part of as a general partner and operating a multifamily deal. So it's amazing how just, little steps, and with people that have gone ahead of you, they can really be a good guide on how you want to get where really where they are.
Amazing, amazing. And just to break down this space a bit more, a lot of times optics, are a bit of an illusion, right? A lot of time people see, hey, hundreds of millions of dollars of assets under management, but they don't realize that there's many different, groups, individuals involved in a deal for a deal to go through. Same way when a structure is built, there's so many different contractors and suppliers involved for a structure to be built. These syndicated investments, these projects are also involved many different groups. So, at this time now you're involved on the equity side, do you know early on that, hey, that's where I want to be? I want to be involved on the equity side of the deal, because we know that this business is the deal and the equity part of it. The deal has got the acquisition side and the management side, but mainly it's the deal and the equity. Did you realize early on that I want to be involved more on the equity side?
Yeah, so I really think, August, there's two things, you have to look at if somebody's interested in investing in real estate. And really, either people have time or they have money, right? And if you don't have money, then you've just got to make the time, right? But there are people that I know that they work a lot. Some of these physicians that made, over $3 million a year. A couple of them I worked really closely with, but they were working 80 hours a week. So they really didn't have a freedom of their time. But for them, passive investing might be a better option, because they're able to leverage their time and not have to actually do the work on a project. For me, I had a good job. I was making, over $200,000 a year, and I was working probably 30 hours a week, 25, 30 hours a week. I was getting paid really well, and it becomes kind of those golden handcuffs, right? You just can't leave because the job is just good enough, that you can live well, but it doesn't really get you where you want to go. But to me, I'm very curious. I love learning about new things. And I was okay saying, hey, I'm going to continue to try to develop myself and learn. And this is an area that I feel really is a need. Why haven't I heard about these type of investments with great returns? I find the returns that we're getting, or that I was hearing about, were way better than the stock market without the volatility, especially with all the tax benefits and other things. So I just started to really look at it and say, well, I'd love to be a part of helping people to do this as well. And so my job when I was a consultant was really a sales type of role. I was really helping to, get people to use certain medical devices. And when it comes to working in real estate investing, a lot of times people go to the either they find deals or they operate deals, or they're more kind of on the side of working with investors and creating content and really trying to explain things and make them more simple. So that's kind of really where I focused. And I realized for me, there was a way to actually transition. So I was going to leave before COVID. I was going to leave my my job, my regular job, and I was going to leave that and just go. But I decided to hold on. And so I actually just last year left my job, and I haven't had a moment where I've regretted it. I thought, man, this has been the best thing ever, is just doing this full time. So I love it. Thank you.
Congratulations. That's a huge step.
Yeah, watching you on your content you've created and listening to you speak, it sounds like you've done this for a lifetime. So you're definitely a natural.
Yeah,
let me share a quick story with you guys. So, a lot of time in this business, the equity side is somewhat dismissed, and a portion of the whole GP profits is allocated to the equity side. But a lot of time, people who have deals put a lot of weight on the deal and the acquisition and the management side of it. And I think that's very important, but I don't think that's a fair divide because of my experience, because I was in real estate for a long time. I was a general contractor, a builder of single family and multifamily, and I had deals all the time. I had incredible deals that would come across my desk, and I didn't have access to equity. I had access to debt as well, but no equity. So the need that I had for equity was so tremendous. And at that time, I didn't understand what syndication was or the option of raising private capital and what have you. So I understand, and I have a lot of respect for people who are, are involved in syndication process, but dedicate, some of their time or most of the time to raising capital, investor relations.
And good point. And I always say that raising capital is like an art. It really is. It's kind of a special, you got to be in the relationship business. You got to be able to communicate, like connect with people on a different level, right? Because they're entrusting you with their hard-earned money. And I think that's really the first step is understanding that it's kind of like an art.
It's an art.
Yeah.
It's a relationship business, but it's also technology is a very important part of it.
Absolutely.
As I've learned with CRMs and with many other ways to create content and provide content. But
and kind of speaking about communicating with investors and it being an art and everything else, I kind of wanted to discuss a topic. Here at CPI Capital, we have our investor communication culture. So one of the things that we kind of take pride in, and it's a very extremely important aspect, is investor communication. And then our culture is that we get back to our investors within about an hour, right? So maybe talk to us about what your investor culture is. We'd love to.
Yeah, that's a lot faster than I get back to. I try to get back as soon as I can, but we tell investors, within 1 to 2 business days, because once you get, a bunch of investors, it's challenging you want to get back to folks, or if they have a question, it can be a little tricky. But no, I think really when it comes to investing in any group, I think kind of part of the vetting process is just understanding, what the values of the group is, who they are. And also, whether you're on the active side, like for what we do, we present ourselves to investors. I always share our core values. I say that, we really like being very conservative in the way we approach investments. So we'd rather say, the returns are going to be 15% per year or 14% rather than 25% or something. We'd rather be more conservative, and we know we can hopefully deliver on that. And, when we look at our projections and we're going forward, we don't want to be super rosy in the way that we think rents are just going to keep going crazy. As far as rents are rising, I'm sure they're probably rising in Canada as well. In the US, they're just kind of going nuts. Some areas of the country, they're going up somewhere between 10 and 30% per year, which is insane. But so core values are really important. We also, try to be very transparent, particularly when things don't go well in a deal, because deal is a mix of things that, there's so many different people involved and so many different, projects and things that some things are going to go hopefully better than expected. Some things will go about as planned, and some things won't go as well. So how you communicate those things. There's a friend of mine, Ken McElroy, who's an author, and he says this. He says, delivering bad news early builds trust, right? So the way we communicate with investors is just really to build a high trust. And that kind of goes to the last core value, is really having this idea of long-term partnership, right? So we tell people like, hey, we'd love to do a deal with somebody. And you're just kind of getting to know somebody when you do a deal. But our hope is if someone invests 100K or invests whatever the amount is, that in 5 years, they will have had a great experience, both on the performance and the communication side. Because you can have good performance, but if people don't get back to you, and I love that you said 1 hour, that's like, I got to raise the bar here to try to communicate quicker with investors. But basically, the experience is really important, right? When you go to your favorite restaurant, the food is going to taste a certain way. The service is going to be on point. All this stuff is going to be there. And a lot of people that haven't done real estate private equity, they have no idea how this works, right? So our job is to really help kind of set the expectations for, okay, here's what's going to happen. Here's when we have a deal, is what it's going to look like, and just walk them through that process. And so I think that, if somebody's active, I think it's really important to kind of make sure, as a sponsor, you're just kind of really teeing things up and setting good expectations, really healthy expectations. And I think as a passive investor, you want to make sure that, you understand the process and kind of where a group is coming from. Sometimes even speaking with other investors that have worked with that group before can be really helpful as well. But yeah, I think the communication side is, I would say, equally as important as the performance. So the performance is obviously very important, but if you can't reach somebody and it's, days go by, even if it performs well, like that's not a good experience, right? So you want everybody to have a great experience. And a lot of ways we do that is really helping to just have reasonable expectations on the front end.
Yeah,
awesome.
absolutely.
Awesome. Talking about stats and numbers, an hour response, yours is a day, and I think is very fair and reasonable. But your stats over here is at 17% close on the calls you get on with, I'm guessing is vetted accredited investors, and that you beat Ava's numbers on those close rates. But having said that, Ava wanted to mention that the raising capital for us here at CPI started 8 months ago, 7 or 8 months ago. So those stats, I believe, is that you're at 12%?
Yes.
12%.
great.
So,
Yeah.
maybe
Yours
as
is really
time goes
great too.
longer, then the vetting process gets better, and then by the time you get on calls,
But really impressive though. You've talked to over 1,200 investors and 30 minutes each call. And we're just going off some stats that we've seen you presenting on YouTube.
Yeah.
And it's really cool to see kind of some of the stats. Average net worth was approximately $2 million. Because I like that you actually asked the investors, what's your average net worth? 17% conversion rate, amazing, who actually invested in the deal. And then you averaged about 13 calls per week. But one thing that you said was each one of those calls was equivalent to about $12,000 in capital raised, right?
Yeah. Yeah. You guys definitely did your homework. So well done on that. But no, the data is really interesting. And I think when you really get down into it, it is a numbers game, right? And we continually learn. Obviously, we're continuing to try to get better at it, but it's all about the experience. But when you keep track of stuff and you have calls, and I have a little spreadsheet that I have that just has all the questions that I ask investors. And if somebody's interested, they can reach out, and happy to share that with any people that want to see that. But basically I go through, you just, what's your net worth? What are your goals? What are things here? And people just tell you, they just tell you what it is, because you want to see, is this a good fit? And you want to understand where their goals are coming from. And that's, I think the big thing is, like, one of the things that really helps me is just when I get on the phone, I try to figure out, who is this person? Are they somebody who's done 10 private equity deals and they're really familiar with this? Or is this somebody who's got a high net worth or a doctor and they've never even invested in real estate at all? And that's going to be a very different conversation, right? I'm going to have to explain a lot more. And so you just have to, as quick as you can, try to get, and so I'll ask a question like, well, what's your work background, and what's any real estate or other investing experience? And those questions will give a lot of information as far as who you're talking to, right? So I think the biggest thing about sales is just being able to really ask good questions and understand who you're talking to. And then what we kind of talk about this process, we try to get it teed up. So when we have a deal, people kind of know what to expect. They're ready to go. And we have had deals, we raised $8 million in 24 hours a couple of years ago. I had some partners and we were just getting a lot of interest, and it was kind of after COVID and everything. It was just kind of right after when deals were starting to come back. And so that can happen. So, but it is, like you said, it really is an art, and there's not, there's a data side, which is the science of it, but there's really an art to how you do it. And it's important to kind of be creative and try to reach people. That's why we do, educational stuff like this, but also because I know all of us, we believe in what we're doing. We believe we're really helping people. And if people get involved with, this type of investment, their lives will be better off. So what you guys are doing at CPI, I mean, I love what you're doing, because you're really helping people on their way to become financially free. And I think that is something that so many people are stuck into Wall Street or other types of financial products that are really not going to serve them, particularly if there is some sort of recession.
Yeah,
Absolutely.
absolutely. Well said. Now, Bronson, I have a question for you. With the many communications that you have had with investors, what has been the number one reason that an investor hasn't invested? So you have a 17% closing rate, right? What about the other 83%? Why didn't they invest, do you think? What was
it's really interesting. I have, my background is sales. I've done sales for a long time. Nobody wants to be sold, right? Nobody wants to show up and be, at a car lot and say, hey, you look great in this nice 1972 Buick, right? Like, you don't want to have that experience where you're being sold.
Yeah.
And so, we kind of look at it a little bit after the fact and say, okay, how do we actually do on this particular current deal? How many people actually invested? Or we look back at that. But I think when it comes down to it, it's the weirdest thing when you raise money. You want to have the impression that, and this is behind the curtain for somebody a little more passive, you want to have the impression that, we've got plenty of money. Like, we don't need your money. We don't need anybody's money. And yet, and it's great. Like, I really feel that, like, hey, we can raise enough money. We raised about 6 million last year. We're trying to do a bunch more deals this year. But, if you just have a vibe, it's like, we don't really need the money from people, that it's apparent, right? So we just kind of almost create a scarcity of like, hey, our deals do fill up pretty quickly. And we actually had one deal we didn't really get to offer to investors, because we had a couple of large investors that came in and kind of filled the whole thing. And so that happens, right? And it's between myself or partners or whatever. But I think it's, again, I try to look at it like, you're not out hunting, right? Hunting is you go out, I'm going to go out and go find an investor or whatever, and you're on the call and you're going to just kind of narrow them, kind of get them into a deal or get them into whatever. But farming is basically like this. We're doing educational content. We're putting things out there. People invest in people they know, like, and trust. So you guys are creating this awesome, presentation for creative, Canadian investors, and about passive income, which adds so much value. And as you do that, people are going to say, I really trust Ava and August, they just seem like they really are good people and their background and whatever. And over time, like I've just seen that in my own life. I've invested with people or whatever I've never even met just because I've heard them on a podcast or I've been involved in that. So you'll kind of see that happen. So again, it's the idea of continually farming. And then when you have a deal, you just put it out there. But I just put it out there once, or I put it out maybe once and then a reminder. I don't really do anything else. I don't call any investors. I don't really do any follow-up besides, okay, this is where we're at, whatever. And I have a very limited list of people that are on that investor list, and people can get set up on that if they're, if they reach out and they want to join our club. But I think there's a big difference though. Because as an investor, it comes across, that if anybody is desperate or just really needs the money, and that's where having partners can be really helpful. Because if I have trouble raising the money, then hopefully one of my other partners can raise the money, right? Or if I could raise more money, then maybe they'll have a little more space in that way. So I don't know if that makes sense. There's some nuance there, but I think that again, everybody wants to invest with people that they know, like, and trust. Nobody wants to be really sold. And again, at the end of the call, I don't really know if they're going to invest right away. I just try to give them a good expectation of, this is who we are. These are our values. Is there potentially a fit there? And when we have a deal, this is generally what it looks like, right?
So most of your work is being done front end, where you make the introduction, you talk about the past deals you've done, your track record, what a deal looks like, have a great understanding of who the investor is, and for them to understand you. But by the time a deal comes in, you're not getting on calls and calling all these different people on your thing and multiple times and what have you. I guess that's
it's just you send the deal out and then they don't commit.
Yeah.
You're not saying, hey, we got to do.
Was it that from early on? And I'll tell you, I'll get into our situation a bit about that. Was it the same way from early on?
I'll tell you my story, because again, I was medical sales guy, and people knew me as that, or I'm on LinkedIn. That's what people know me as I sell devices. And for years I've been doing this and I did well at it. And so when I, had my first deal, or I was, my first deal I was having these conversations, still trying to tee investors up, but I had all my friends and family. I had, something like 62 calls or meetings with friends and family, just talking about, an investment or what this would look like, or getting information from them, getting on my deals list. And absolutely, after when we finally had a deal, none of those investors actually invested. Right. So it was that guy that I mentioned at my meetup that was like, saw me in that context and saw that I kind of fit there. So it's tricky, it's challenging, it's hard to get going. But now, since then, 4 or 5 years later, we've had a number of those people that I've talked with that have invested. So the thing is, I think you have to look at it, you have to have a very long-term view of this. And it's, your timing is not everybody else's timing. And, just because you want to do it. But again, what we're doing and what we're learning and what we're about, it's such a valuable skill. Even if you're like, you guys are more active and you're operating and you're finding money and doing deals, it's a very active thing, because it teaches you also about the passive investing side. So even if you do it for a while, whatever, and then you go passive, like that's great. I think we should all aspire to be passive investors. But I think that the process, it just takes time to get into it, because people have to see you as someone who is an authority or somebody who has experience in that way. Like, it's like if your car mechanic said, hey, I've got this great investment for you, and it's, something to do with cryptocurrency or overseas, like it just wouldn't fit. It'd be like, well, that doesn't really make sense, right? So it's as you tell your story, whether through an email campaign, which I recommend everybody does, get on MailChimp or Active Campaign, and just start sending out updates. I'm going to these conferences, I'm learning this, I'm investing in this, just because it tells the story of what you're doing. Because a lot of people just have no idea. You're kind of a secret agent. And then when people go to raise money and then they can't raise money, and they're like, well, it just doesn't fit. It's like the mechanic doing real estate. Like, it doesn't, I thought you were a mechanic, I didn't know you were doing this,
Absolutely. And I can share a story with us. I mean, initially when we came out and we left both of our careers to spend full time on, we both had real estate backgrounds, but we left our careers to focus 100% on real estate, private equity, and building CPI. And we noticed right away, we picked up some traction. A lot of people signed up to our content. We have over 1,500 people that were part of our database, and they were opening our emails. We were getting a 40%. We still do it. It's dropped a bit because now we have over 2,200 people part of our database, 40% email open rate. But on our first deal that we had was a bit of a humbling experience, because we felt like, hey, I can see who's opening my email. This is not competition or people trying to learn what we're doing. This is, these are busy professionals that are opening our email 7, 8 10 times, but when the time came to make those investments, it
It
wasn't,
wasn't as easy as a click of a button sending a deal out and having millions and millions of dollars raised, right? So
no, our numbers have
Yeah.
from our first deal to the second deal, the number of investors who came on, and then again from the second deal to the third deal, the projections are there, and that trajectory is great. If we keep it on the same line, it'll be wonderful. But maybe this is more of an active side of the question for people who are somewhat starting out, creating a lot of content, have closed on some deals, but what they're noticing is that the conversion of their community to actual investors is not that high. Is it because something along the line, and I know this might be a difficult question to answer, but is it because something along the line might be broken, or is it because this is just the normal way? People want to see progress. They want to see you possibly going through a full cycle of a deal, which we haven't. Tell us about your experience on this.
Yeah. So again, people have different things they look for. You know, I was first getting on calls, and kind of how I got from 100K to a deal to, you know, we raised. I found a partner about 6 months after that, and we basically raised $15 million together over the next 18 months. And so I got on a lot of calls with investors. Like I said, you know, it was average 13 or 15 calls a week. And at the beginning, I didn't know what I was doing. I didn't know. I was just, oh, how's it good? You just kind of stumble through it, right? And after a while, you get comfortable with talking with people. You kind of figure out what they're looking for, what the right questions are, and things like that. But the amazing thing about all this is a lot of people think when it comes to real estate, private equity, that you have to do everything yourself, right? You've got to be the one that finds the deal, and you've got to be the one that, you know, does all the diligence, and you've got to raise the money, and then you've got to operate, and you got to do all this. Well, for me, how I've gotten around that, I have a partner, one of my business partners who works on almost every deal with us. He has over 10,000 units and over 25 years of experience doing asset management. And so there's really not an issue a lot of times with, you know, my experience is not as relevant as his experience, because I don't really operate the properties. And I can show in Atlanta how we've had multiple deals, and we've had just phenomenal results. Out of the 8 deals we've exited the last couple of years, they're between 17% return per year and 43% return per year, which is amazing, right? And some of that's just being in the right markets, being in Atlanta. So I think, you know, the biggest shift I think I had to make was really shifting from I have to do this myself, I've got to be the whole team, to like, you know, I can have team members that do other things. Now I'm involved. I'm not the person that finds the deal, but I'm a part of the asset management team. I do my own due diligence. I invest my own capital. So I'm passive as well to a significant level to what I can afford to do. And then I'm a part, like I said, of the asset management team. I raise capital, and then I work with investors afterwards, which is considered investor relations, which is a little different. So it really is a team sport. You don't have to do everything. I think people that try to do everything, it can be really exhausting. And so and sometimes in a couple, you'll find one will focus on, you know, asset management or finding deals. The other will focus on more of the investor side, or they'll just partner. They'll say, hey, we'll find, you know, we're really good at creating content and connecting with investors. And, you know, we are also investors. So we find other good partners, and people appreciate that as well. So I think being able to, you know, present kind of where you're coming from, and also realizing the value of partnership and networking, that you don't have to do everything, right? And so I think, but go back kind of what you said, it is challenging this is not something that's just super easy to do, right? It's like, oh, you just flip a switch and all of a sudden you raise 20 million. Like it's hard work. It's a grind. It's creative. You're looking for solutions, and it's not easy. It's not that it's not that it can't be done. Jim Rohn is he was a famous motivational speaker. And he said, you know, if it's easy, it means it can be done. Right. And if it's hard, it means you can't do it, you know? So it's like, well, you know, in that definition, it's easy. It's just, you have to put in the work and the time and the effort, because you can do it. It's just something you have to learn, and you can learn to do it.
For sure. Is that advice my grandma always gave to my mom when she complained about school. She's like, if it was easy, everybody would be doctors and lawyers.
Yeah.
Right.
Yeah.
So no, but on that point, a very important point you bring on about you know, this business being a team sport, and focusing on what you're great at, and having partners who are focused on other aspects of the business. For example, asset management. The way I view real estate private equity or the syndication business is it's a pie, and that pie is divided into 3 pieces. One piece is the equity piece. One piece is the acquisition, the deal piece, and the other piece is the management, value add, renovation that needs to be done. Now, if you have partners that have a focus and background in each one of these pieces of the pie, then you can have a superstar team. So, but the question becomes, in partnerships. Again, these, if you're going by these SPV, creating SPV for each deal, or the syndicated investment projects, these are project-specific investments. They're not a fund where it continuously raises capital and continuously buys assets. So in this case, kind of a long way of coming to my question, but if our job is finding the best possible deals for our investors and being astute fund managers or investment managers, now as far as being diversified in multiple regions, how do we manage to have multiple partners on the operation and management side within multiple regions? Because now you're in partners with multiple operating partners who act as your boots on the ground or asset managers for your deals in multiple regions. How do you balance that? And is that a strategy you utilize? We currently utilize that strategy. Talk to us about that a bit.
Yeah, so it's challenging. When you start, you bring up a really good point. It's if you're working with partners, they're in different areas. We've got deals in Oklahoma City, we've got Georgia, Florida, Alabama, Arkansas, and some with different partners on those deals. So how do you manage all that? How do you keep connected? And in reality, the challenge is when you're involved, but you're not maybe the primary asset manager. You are sometimes at the mercy of who's kind of the person on the boots on the ground. My partner in Florida is, at the property every couple of weeks right now. He's doing a lot of stuff, a lot of different, we have a couple of properties that we're working on, and it's great. It's great to have somebody who does that. But the downside of that, at least for me, and I'm getting to a place now where it's kind of like I'm thinking more about this, that as we can raise more money, it makes more sense to try to bring someone in-house, right? To have more of an in-house asset manager or have a partner that can kind of do that more with Bronson Equity, right? Who can be that person for us, because it would give us more control, right? Because if something doesn't go well, then you can step in and say, hey, this isn't, or maybe you have step-in rights, which, if a deal doesn't go well, you bring enough money, hey, you can step in, you can kind of take over, because otherwise, investors are at the mercy of whoever is really operating the deal. So it is a challenge, but I think it really comes down to, trying to get to know people. I think reputation is huge. I do a background check on every person that I partner with or is part of the partnership on the operations level. And I think those things are important because obviously they give you a greater comfort level. But I have a saying or have a belief that you really don't know how someone, how it is to work with someone until you've done a deal with them, because you can feel like, oh, we're gonna be great, whatever, and then you get a deal and you find out, oh man, they don't really communicate well, or they're kind of, they do this and they kind of cut corners in these areas, or you really get to see someone's character and who they are and how they respond to you in a deal. And so there's people that I would not do a deal again with, and there's people I'd be like, yeah, I'll do deals with these guys all day long, and it's getting to be more of the latter, where I'm like, yeah, I just really found some good partners, and it's kind of a win-win. Let's just keep doing this, right? So, but I
Perfect.
think in the beginning it's hard because you're trying to get good access to deal flow. You're trying to develop your network. And, there can be some great deals, but you also find partners you're like, you know what, I think on these areas we match up, but on maybe these areas over here, we don't match up as well, right?
Got it. Perfect. Perfect. Now, great setup to my next question and final question, unless Ava has any more questions before going to the next segment of our show.
I'm good.
And that is, you kind of touched on this a bit. Hey, initially involved more on the equity side, some management, some investor relations. Obviously, you're underwriting the deals that are coming to you for the benefit of your investors. But you're also looking to bring in an in-house asset manager who oversees the operating partner, oversees the property manager, has the capability of even stepping in into the management side of the property if things go awry. Is the plans for Bronson Equity to become an operating partner, or is your firm focused on being in the space you're on where you're partnering with operating partners?
Yeah, it's a good question. We haven't fully decided exactly. I think it depends on, what that looks like. I think right now we're raising somewhere between $1.5 million and $2.5 million per deal pretty consistently. If we got to where we could raise 5 million per deal, we might say like, well, that's a pretty big check. Could we do our own deals of maybe a little smaller size, or what would that look like, to be able to do that? And I think it also depends on who the potential partner would be. Would this person be an employee? Or would they be someone who is more of a partner that's more of an equity partner? And I think I'd be open to both. I just think you have to look at and say, okay, we're getting a pretty good We're getting pretty good returns, pretty good performance. Everybody's happy. I'm okay getting a little less as long as the performance is there and it doesn't, tie me up to where I love, being able to connect with people and doing calls and creating content. I enjoy that. If I'm not able to do that, then, I'll just have to kind of look at it and see how am I going to structure this. I don't want it to be that I'm having to do, flying to Jacksonville or flying these areas and doing it all myself. And, I do go out and I'm a part of that stuff, but it's a very different level if you're the primary asset manager, you're the one who's actually, really kind of in the mud and really getting in there with each deal. So I think that's a good question. We'll have to do a follow-up on that in the future. But I think in general, the larger groups I think it makes more sense to bring a lot of it in-house, because then you can really, we talked about investor experience, right? You can really tailor the experience of, you just have much more control over the investment as well as the investor experience as you go through it.
And the bigger piece of the pie, like the analogy I made. So there's more of the GP profits, fees, and promote. Okay, awesome, great.
Are you ready to go to the next?
Really, yeah, I was very excited to have Bronson on. Sorry, I stole some of your questions as well.
I love it.
But here, we got okay. We're
next segment. 10 championship rounds to financial freedom.
Ready.
All right, here we go. First question. Who is the most influential person in your life?
I'd say probably my dad. My dad's been super inspirational, just really amazing guy, strong in his faith and just beliefs, and also his work ethic. I learned so much about working hard from him. I think in a lot of ways, my dad.
Amazing. Awesome. All right, Bronson, what's the #1 book you'd recommend?
Well, that's a great question. I think so. My favorite book of all time is actually, I read a lot, but this is more of a personal development book, and it's called The Gifts of Imperfection. So The Gifts of Imperfection. I even said it imperfectly, but The Gifts of Imperfection by Brené Brown. And it talks about just owning your story, overcoming shame, just living out of a wholehearted place and being grateful. And I just love the book. It's a short book, 150 pages, great book.
Nice. I just wrote that down.
Yeah.
If you had the opportunity to travel back in time, what advice would you give your younger self?
I think I would say be kind to yourself. I think I was really hard on myself for a lot of years, saying, like, well, am I not further along or doing more? I think I'd just say, relax and be yourself and have fun.
Awesome. That's great. Okay. What is the best investment you've ever made?
That's a tough question. I think honestly, I'm a parent, so being a parent to my daughter who's 9 is just the best investment. Just having her and spending time with her, and I'm getting ready to surprise her to go to Legoland. We live in Southern California, which is her favorite place on earth, so we're gonna go there this next week for a holiday. And just really the time and I spend with her, I think is just the best investment I can make.
Amazing. Have lots of fun at Legoland.
Thank you. Yeah, it's more for me probably than for her, but she loves it too. So.
Yeah. Nice. Now, what's the worst investment you've ever made, and what lessons did you learn from it?
Okay, so I had a deal when my net worth was not nearly as high as it is now. I mean, I had, let's see, it was about a third of my net worth. So I lost $70,000 in one day on a options trading strategy involving iron condors and other sorts of jungle creatures. But yeah, that was probably what I learned about myself in that is that I'm not the technical guy who's working like an engineer type who's working the thing and moving the formula and that's just not me. So I learned that that was probably not the best fit for me. But it was an expensive lesson, but I learned the lessons. So it definitely bore fruit in my life.
As long as you live and learn, right?
Yeah, exactly.
Okay, great. How much would you need in the bank to retire today? What's your number?
Oh, that's really interesting. My big why is fighting human trafficking in the world. So there's 20 to 40 million human slaves. So I have a really big number, and I just want to keep working towards it. And I think this part of my life is more the saving and accumulating side. And there'll be a point where it'll be more of the giving side. And I want to start doing that. I'm doing that now, and I'm finding ways. But as it grows, I want to just find ways to deploy more of it. So. But it's a pretty lofty number, and it's not, about yachts and Mai Tais for me. It's more about making a difference in the world.
Incredible. Amazing. Bronson, if you could have dinner with someone dead or alive, who would it be?
I think I'd have dinner with Jesus. I'm a person of faith, and I just think, I don't know, not from a religious standpoint, but just like, just to relate and sitting down and shooting the breeze. I think that would just be amazing.
Nice. That's most. I think that's the most common answer.
Yeah, definitely.
Yeah.
All right. If you weren't doing what you're doing today, what would you be doing now?
Oh, that's a good question. What would I be doing now? I think honestly, I love traveling. I've been to 37 countries. I just love to just travel more and just be around the world. Spend a couple months in Tuscany and rent a car and go to all the little towns and just travel and learn from people. And maybe I'd write more. Maybe I'd write a book or write more. I'd like to write a book in the near future, but just spend more time learning from other people, other cultures.
Incredible. Okay, book smarts or street smarts?
Ah, I would say if I was going to choose one, I would choose street smarts because I think that people that are there are a lot of people that are very smart, but if they don't have intuition, I think that it limits them. Am I supposed to give definition or like, am I supposed to answer the question?
No.
Absolutely. Yeah, take
Like, I'm giving mine.
as much time as
we,
you want.
Yeah, we love it
Yeah,
when you
yeah.
kind of explain
But
why. Absolutely.
Street smarts. I mean, you'll meet people that like Robert Kiyosaki talks about this in his book. It's a lot of his books. He wrote the book Rich Dad Poor Dad, and he just talks about like why A students work for C students, right? So A students will work for C students. So somebody who's a star, book smart person, they may go work for somebody who's not as smart. Their intelligence may not be as high, but they found a way to make it work. And so that's why you find a lot of people that are millionaires and billionaires they never even finished high school, right? Or they didn't finish college. And so I think at the end of the day, if you're intuitive and you learn, I mean, it's all education, but it doesn't have to come from books.
All right.
Awesome.
All right. Last question, Bronson. If you had $1 million cash and you had to make one investment today, what would it be?
Right now, I would probably put it all into a multifamily deal.
Nice. Right on.
Awesome.
Multifamily.
Perfect.
Yeah, I would.
Great.
I also participate in what I'm invested in every deal. I think it's the
What
best
you
thing you can
preach.
do.
Absolutely.
Awesome.
Awesome.
Bronson, what's the best way people can reach you?
So yeah, I wrote this special report, the single best investing strategy during and after a pandemic. It's 24 color pages, just talks about some of the unfair advantages of multifamily investing. It's a free download at bronsonequity.com, and it'll just pop up. You can download it, or you can shoot me an email at bronson@bronsonequity.com.
Fabulous. Thank you so much for being our guest today.
It was so fun. Thanks, guys. Really appreciate what you're doing. I love Canada, so well done.
Awesome. Thank you so much.